Welcome to this video. In this video, I'm going to be making a stock analysis of Coreweave. So if you like this video, please don't forget to leave a like and subscribe. And of course, remember this isn't financial advice. This is purely for entertainment and educational purposes. Now, if you don't know what Coreweave is, that is an AI hyperscaler or an AI cloud hyperscaler. And their business model is to have huge server farms like this with GPU inside them, and huge companies like IBM, Nvidia, and so on and so forth can rent these GPUs on an hourly basis, meaning they can optimize their spending when they're training a new model or expecting higher workloads. Example, in the day, of course, there's going to be more use during the day than in the night. Now let's take a look at the stock. Now, as you can see, the graph here is quite small. As you can see, it was firstly publicly traded back in March of this year, and it has increased quite nicely ever since the IPO. But however, there is a problem, because on the 15th of August, everybody who bought before the IPO on co-insiders can sell their stocks. Now, as you can see right here, that is, let me just find it real quick, that is 84% of the shares that is outstanding, or roughly 3 million shares. So they can't sell it at the moment because there's a lockup period, but that is ending on Friday the 15th, meaning tomorrow. So chances are it's going to fall. At least that is what the market has been anticipating, which is why there's a huge sell-off today, because people fear that they might be selling off or taking home some huge profits, meaning that stock could tank. Now the problem with that is we don't have any proper support levels. The only proper support level we have for this stock is right down here, and if it hadn't to do that, it would fall about 50%, which of course is quite poor. Now currently we are lying on previous support levels. If we fall through right here, as you can see, chances are we are going to be falling even further down. Now, why do I think some people might sell? Well, if they bought here or even before, well, they are selling at a huge profit, which would be nice. And we have seen some poor earnings, as you can see down here, minus 616% and minus 17%, which is of course not that great. So that might be a reason some people are being a bit scared. Of course, they're paying out dividends, but even with that being said, just look at how much more money they're making. They are making money hand over fist, but then again, they are estimated at quite highly. Now, as you can see here, the beta in this company, it says here it's quite low, but I do think that it's gonna rise. So overall, I would be very careful with this stock at the moment. Now you can see how they make their money. It is in cloud computing services, and that is the only thing they do. That is these data centers. Now, if you take an overview of the company, as you can see, we can't even see how many employees there are, and as you can see, we still have quite a lot of preferred stocks as well, and of course a decent amount of debt. But then again, they're building AI data centers, so that makes a lot of sense. Now, at the current rate, we can't even see the PE or PS, so we don't even know the price to earnings compared to sales or earnings, which of course is something I won't invest in if I don't know that personally, at least. Now, if you look at the earnings here, as you can see, they're estimated to make money next year, no, not next year, 2027. Let's hope that. If they do, it will be a crazy stock to own, I personally think, because the hour-by-hour rate for GPUs is absolutely amazing. If you want to build an AI company or need AI functions in your company, but you don't want to build a farm yourself or a server yourself. And as you can see here, the earnings as well, they're just estimated to grow their profits year over year. And this isn't unrealistic. If you look at over here again, as you can see, back in 2022, revenue 15 million, revenue last year 1.92 billion. So overall, that might happen. So maybe I'll be wrong in my thesis that it is going to fall after some insiders are going to sell it, because of course they want to take home the profits. If that happens, chances are we're going to break through this previous support level right up here, which is right up here at about 145 bucks. If that happens, we're going to be up by quite a lot. Now, something that is also going to happen when that is a lot more shares going to be in the public market, meaning the volume in the stock is going to be a lot higher, meaning each stock traded will have less impact on the stock. A reason why it fluctuates so much is because there's quite little volume in the stock itself. As you can see here, only 36 million. This is about with 10x, almost about 8 times as many shares, because of course 300 million shares ish is coming out tomorrow. Now, if you go down here to the technicals, for the day it's a sell, and for the month we don't even have any technical data because the stock itself is so young, so the technicals haven't been able to properly work yet. Now, the analyst rating for this is 6 strong buy, 16 hold, 1 sell, and 2 strong sells. So as you can see, it is all over the spectrum currently. Now, the max is up here, which was actually trading earlier this year, and the minus is down here, which is below the IPO point. So as you can see, there's still quite a lot of opinions on this stock. Personally, I think if insiders don't sell out now and they can continue with their earnings, I think this stock is going to be absolutely amazing in the future. If they fail one more time on earnings, I think it's going to be quite difficult to own this stock. That was my stock analysis on Coreweave. If you like this video, please don't forget to leave a like and subscribe. And of course, remember, this isn't financial advice. It's for entertainment and educational purposes. If you want to see more videos like this, please leave the company's room analyzed in the comment section below.